My name is Jason, and this is my colleague Hafiz, Esther, and Phu. We are from Research Team E, and we are very excited to be able to present to you our research and analysis on Toto, Japan's leading champion in the sanitary ware industry who have continuously offered comfort in all of our lives. So let's begin. Through our valuation, we arrived at a target price of 5,625 yen, offering a 19.3% upside from its closing price on September 28. Our story is very simple. We believe that Toto stock is currently underpriced due to the market oversensitive sentiment to a production issue that occurred earlier this year in China. We believe that Toto is a company with strong sustainable intrinsic value alongside sustainable growth, which is why we believe that this is a one-time golden opportunity to buy Toto stock as a value company. In order to prove this hypothesis, we present to you our three key value business drivers. The first one is sustainable growth in domestic market. The second one is about favorable dynamics in the strong competitive positioning in the emerging market, which in hand will increase profitability and returns on shareholders. Esther, can you talk a little bit about Toto's business?
Thank you, Jason. So I understand that 95% of total sales come from its core global housing equipment business, which produce mainly sanitary ware such as toilets, faucets, bathroom units, and washer widget as the main flagship product. In fact, in Japan, we can see Toto's product in almost every building and train station. The other 5% of the sales come from its new domain business, with products such as green building materials and advanced ceramic. As you can see, currently, Japan domestic housing business still contributes the majority of the revenue. However, the company's true strategic focus is the overseas markets. Geographic revenue mix has been shifting, making Asian emerging market increasingly important for the company.
Understanding Toto's business, let's move to our first investment thesis about the domestic outlook in Japan. Here, we can divide Toto's customer into two key categories, the remodeling and the new construction. While the new construction demand have been decreasing due to the aging population, we observe that the existing utilization rate of properties have actually been increasing. What this means is that a lot of Japanese are opting to upgrade their existing houses, which is a sustainable future remodeling demand. Over the past few years, Toto have carefully positioned themselves to cater to these higher value customers by partnering with a lot of global housing equipment manufacturers like Daikin and YKK. In addition to that, they also have a very strong and intensive showroom network all across Japan. So by this, we believe that Toto is a highly defensive market leadership position, and we can expect their performance in Japan over the next few decades.
But Toto is not only strong in Japan, which brings us to our second thesis, favorable dynamics and strong competitive positioning in emerging markets. In the past decades, Toto has been aggressively expanding its business operations globally. The company's overseas growth has been entirely organic, as the company has committed to build up universal brand power and has never resorted to M&A strategies. In addition, the company's management has strong emphasis on the sustainable ESG practices through its global environmental vision. Among different geographic business, emerging markets are the most profitable. Going forward, we believe this will continue to be the biggest driver of profitability for the company. The demand of Toto products in emerging markets are expected to increase due to GDP growth and increase in consumer spending. We have also conducted original research utilizing the best diffusion model, and we found that Toto's products in emerging markets are in the favorable diffusion stage, meaning the company can benefit from the strong volume effect, gain more market share, and be able to expand its customer base. From our research, we have also found out that in Chinese market, Toto sales network far outnumber other players and are strategically concentrated in high population, high income Taiwan Chinese cities. But not just China. Toto has also established a firm market share in other Asian emerging countries such as Thailand, Taiwan, and Vietnam, and has been making aggressive production expansions in recent years. We have also conducted original web-based research in order to evaluate the company's brand power, and we have found that Toto brand is highly competitive throughout the world. Combined with the strong competitive positioning, we believe Toto is in a favorable position to capitalize on the high potential of Asian emerging markets.
Now, let's move on to our third investment thesis. Due to the sustainable growth in the domestic market, as well as strong performance of the emerging markets, we have forecasted that in the next 10 years, Toto will be able to realize CAGR of 4.19%. This growth will be mainly driven by the emerging markets, with CAGR of 10.24%. Additionally, Toto can also improve its operating margin due to the mixed effect of highly profitable Asian emerging markets, as well as continuous efforts in cost reduction through manufacturing and supply chain innovations. From our research, we have found that Toto has highly disciplined investment strategies and has been able to achieve higher return on invested capital higher than its cost of capital. For future ROE improvement, we believe that it will be driven by 3 factors: more efficient use of asset, strong bottom mix effect from the emerging markets, as well as lower leverage. Toto can finance its future expansions using internally generated cash flow, thanks to its cash flow capacity. Indeed, in the past few years, Toto cash holding have been building up. However, during our discussion with Toto IR team, management have implied that they have no further intention of increasing cash holding and will instead focus on increasing shareholders' value. We believe that through robust capital investment, as well as increased dividend payout, Toto will be able to make the balance sheet more efficient, as well as more value to its shareholders.
So moving on to valuation, after carefully analyzing each pillar of our investment thesis, we have come up with a valuation target price of 5,625 Japanese yen, offering a 19.3% upside from the current closing price. So this is a combination of 3 valuation approaches: the discounted cash flow, dividend discount model, and also sum of the parts relative multiple valuation. For our main DCF model, in order to reflect the company change in cash flow, investment dynamics, as well as sustainable intrinsic value, we projected a 10-year model divided into 2 phases, an investing phase and a harvesting phase, to arrive at 5,611 yen of intrinsic share value. To see the downside to our model, we employ a 10,000 scenario Monte Carlo simulation with random distribution to the main variables that drive our model, and we see very limited downside to our recommendation, as there is a 75% confidence level in line with a buy recommendation. In addition to the discounted cash flow, we also value the company based on the strong dividend policy. We expect in the next 10 years, the company earnings per share will grow robustly in the future, as well as higher dividend policy coming from the company. Our final approach is the sum of the part relative multiple valuation, where we value the company based on original peers multiple. And based on the strength and relevance of each model, we chose a valuation weight of 50, 25, and 25 to arrive at a 5,625 Japanese yen of target price. Of course, no investment comes without risk, and we believe for Toto, the biggest risk for the company are sensitivity to macroeconomic risk as well as production risk. However, the company is actively taking efforts to mitigate macroeconomic risk by actively diversifying its business into overseas markets, as well as portfolio diversification through the new domain business. For production risk, we believe the company can hedge against production risk by shifting its production to nearby locations, as well as maintain a high R&D level in the future to sustain innovation.
To conclude, we believe that we have identified what the market hasn't yet. Toto is a company which have positioned themselves competitively, which allows them to sustainably grow in the domestic market and also capture the value of the favorable dynamics in the emerging market. This in hand will increase profitability and also shareholder returns. Dear distinguished investors, this is the time. This is a golden opportunity to flush your doubts away and buy Toto. Thank you very much.
The 11th CFA Institute Research Challenge Japan final competition. Winner is Team E.
We are going to Sydney.
The judges will now present the winning team with the trophy.
プロがあるわけです。
Any music? おめでとうございます。